Are we live?
Yeah.
I'm not doing another creatine fucking bit.
So how about creatine? I just started taking creatine.
How about creatine?
Dude, I'm snorting it. I'm snorting it. I'm snorting the
I'll put it on
creatine.
your
This
Uber
time-
app.
No,
This time,
I'll tell
I
you
heard if
my-
you put it on your Uber app,
it
your
improves
car-
mitochondrial function.
Well, this nipple,
I
put it
snorted
on this
right off
nipple.
my own titty.
I put it on this nipple 5 episodes ago, and now this nipple is abnormally large. Oh my god!
I started lifting weights for the new year, and I took some creatine. And this is totally true. I did it a couple times, very light. Hurt my shoulder. Have tons of pain in my arm now. So fuck it. The
very
creatine didn't
Jewish.
even help.
That's just
100%.
Fuck
short-
creatine, man.
That's just what we would call a Jewish weightlifting story.
I should have stuck to like walking in the pool. You get in the pool and you like walk
We should
around.
just do a series of books called Short Stories. Jews weightlifting, Jews surfing, Jews horseback riding. These are all short stories. Jews in the military.
Swimming
All right.
while standing up with styrofoam on my arms. That's
Exactly.
the move.
Exactly.
I felt so behind in this conversation. I didn't know what creatine was. I had to Google
Oh,
it.
okay. So creatine,
Now I know.
guess,
It's about-
was
it's about
supposedly
muscles.
illegal, but now everybody is using it.
It's good.
It's
for
actually
you,
been around
apparently.
forever. It's just gotten super popular. It's great. You want to get like a good brand, like Thorn or Momentous, and it's great. It's great for recovery. What did I say? What lean muscle mass, recovery, mitochondria, all
Brain
the
function.
buzzwords, brain functioning,
And you can snort it.
and you just snort that.
No, I'm
shit.
just kidding.
You just dissolve it in water.
It doesn't
we
hit
live?
as hard the third time. Yeah. All right.
We're live? I don't believe you. I don't believe that
I've
we're
caught.
live. Prove it that we're
caught
live. Well, sorry, you caught me mid-snort of crack creatine. Listen, since this isn't going to be live, let me talk to you about my creatine dealer. I got the best creatine dealer. Look at this. Let me just tell you. Oh, it's just unbelievable. Creatine, is it good for you, Phil? What is the latest on creatine?
It's great, man. Nobody's having.
That's great, Greg.
There's no like studies coming out with cautionary. It's like
Okay.
great for recovery, great as you age, great for your lean muscle mass, great for your mitochondria.
You know what? Let's start again
development,
because I'm sure it's
functioning, blah blah blah.
fucked up. So are we
We've been having
really live
technical
this time?
difficulties today, and evidently we've been all.
Are we really live right now? Because
We're
right
live.
now I'm on OnlyFans making friends. Okay, so we are live. Welcome to
have
Trends with
Josh
Friends.
Moore, that's the correct pronunciation. He's
Okay,
the
but
man.
hang on. So Phil,
Uber.
hang on, Phil Perlman, welcome. We dressed the same today. It's the odds are very low. Welcome, Phil. JC's on layaway. And as always, joining us, the AI Whisperer, 20 years with Goldman Sachs. And he's joined the good team. He's joined the world of AI and investing personally. Very fired up about AI. People that tune in here love him. Michael Perek, welcome. And from the world of New York, we got everything covered. Everything covered today. Josh Moore, old friend. Josh, you're only like 40 maybe?
42, but thank you.
42. Yeah, you look great. That's what it
Thanks.
looks like when you have no employees and run a very successful business. This is
No
what
one
it
to
looks
stress
like
me
when
out
you
but my
have-
kids.
This is what it looks like when you have 50 employees. And Phil, that's what it looks like when you just have bad genes. So welcome everybody to Trends with Friends. Our special guest, like I said, Josh Moore. We're going to get right into it. We'll get to the market, but we just had this fun conversation when we were fake live because Josh came on to talk about his AI business and what AI has done for the world, but we can't deny his history. Early fintech at Covestor, which was just ahead of the curve, big investors. I was a tiny investor as well. Fred Wilson, I think, led that round. You were ahead of the curve. Don't want to talk about that, but let's talk about Uber. Underemployed number 30 at Uber. in charge of the biggest city and the most important city in the world, New York, which was not the first city that they did. I think San Diego was one of the first cities, and Coronado, I remember because I lived here. When did New York come online? Do you remember?
Yeah, so they put New York online as the first expanded city, actually after San Francisco. And this was probably middle of 2011.
Was there Uber X yet? Was there Uber X yet?
No, this was still in the land of totally licensed black car service,
Uber Black,
which is now known as Uber Black. And I first made contact with Uber that December. They were looking for a GM for New York. It was like, run your own business here, basically. We'll provide the technology and support, and you'll go do that. And so it was great. I was doing operation roles at other startups, and this felt like a good one for me. It turned into a bit of a public relations and government affairs job, just because regulation is so sort of central to this sort of thing, especially here. But yeah, after about 5.5 years, we went from something like 0 to $3 billion in annual bookings. The business expanded to places like New Jersey and Connecticut and the Hamptons and Westchester and all these places as we were starting to expand, across the U.S. and then eventually across the world.
And who played you in the movie?
In the in the made-for-television Showtime show, they had a couple of sort of New York episodes that were collapsed into one storyline, which is around the launch. There, I was not in the show, so like no one played me. There was a couple of
because I thought in one of the party scenes there was a picture of a guy and we only saw his ass, and I always thought that was you. So that
was it a nice?
You.
If it was a nice ass, yeah, it was me.
It was a fun,
I don't know.
Show. I can't comment on that.
Yeah.
Hang on,
that
let me
show
try
was
some more creatine and answer that question. I don't know.
That show was based on the Mike Isaac book, who wrote a lot of like really nasty stuff about us for the last couple of years I was there. So like the show was entertaining. I liked it. I even maybe enjoyed it, but it wasn't totally accurate, as you can imagine.
Okay. We'll move on.
It only went the way I said it went. Didn't go the way they said.
Quickly, Uber Waymo. Just quickly, Uber Waymo, because just get it out of the way now.
Uber Waymo Tesla. Uber Waymo deal.
Okay,
in
Uber
Austin.
Waymo Tesla. Who wins? Who wins?
Robotaxi.
Yeah,
it's Waymo and Robotaxi, obviously.
Yeah. So I'll preface this by saying I don't know what I'm talking about. My understanding is that Waymo has to do a deep mapping of. I'm saying I'm like I did it. I'll say my bit, but I'm just saying
Please
I'm.
Say it with force, as if
All
you've never been more confident in anything in your life. That's the only.
I'm super right about this.
Yes.
I'm super right about this, and you should trade on this advice. I
Correct.
think that Waymo has to do a very deep mapping of every city that they're in, and the cars that they use have very expensive LiDAR sets that sort of do a specific way of seeing. And Tesla does it differently with just a visual thing. So, and it's a more generalized solution. I have a Model 3. I've been totally blown away with it, particularly since July when they rolled a new version. And the versions get better and better. I am consistently driving 50 miles with no interventions. It's crazy. It freaked my wife out at first, but now she's into it. Like, it's really, really amazing. And it could go anywhere, back roads, whatever. It can sort of figure out, it's a more generalized solution to autonomy than a sort of the map of the world looks like this and we'll be in that map. The problem with Waymo, I think, that they're going to find is similar to problems we had at Uber, which is that people are messy. And not only drunk people or like nefarious intent. We're talking like moms with a baby and the baby.
That seemed Phil. That was a slight at us. I think he could be a regular the way he's insulting us. Keep going.
I mean, like you think, drunk people, you'll just warn them once and then they'll stop being so messy. And that's part of it. But actually the biggest issues with messy vehicle issues at Uber was the like child who vomits. Or the child eats some Cheerios and leaves a whole mess behind. People make a mess not only out of bad intention or because they're sloppy, just because that's how the world is. And so having a human who takes responsibility for that car has a purpose. And so I sort of wonder at scale how that works, where the cars live, where they go for downtime, how they charge. Like San Francisco, things work in SF that don't work anywhere else. That's part of why San Francisco is awesome. But Waymo will never operate in New York City. Like I would bet on that. Just never, ever going to happen. Whereas Tesla, I'm able to imagine that a little bit better.
All right, Mike, chime in, and then we'll get to
I
our,
just,
our schedule.
this was not on the topic, but I just want to, because we're talking about it. This is a deep interest topic for me. I have a post on my Substack, number 510. If anyone wants to look at it, there's a lot more detail on a lot of the
Quickly, go
elements.
ahead, Mike. Quickly, what do you agree with?
No,
Josh?
I agree. Josh brings up the core point, which is human, that everyone just assumes robotaxis and all these things are automated and people go away. And you need people more than ever, because he said it pithily. You said it pithily. People are messy, and one of the former CFO of Goldman ended up being CEO of Hertz, and they bought a huge amount of Ubers, and they're now selling them for billions. One of the issues is this business of people really messing with these cars on the EV side a lot more, and this is a key point. So I just wanted to underline that.
Yeah, and in the real world too, in the physical world, think about comedians, which I talk about a lot. I know people just shake their head, but I'm like, who's the most popular type of entertainment right now? It's comedians, both from news. It used to be Jon Stewart. Now it's every type of comedian, stand-up, interaction with the crowd, live, working all the time. You can't AI that type of creativity, and hence you're going to have this incredible, you're seeing it with OnlyFans to start, but now it's moving to OnlyFans of every category, which I haven't talked about enough, but this is incredible. And this goes to the whole topic of today, Phil, which is too small to fail and too big to fail, that two things can be true at the same time. But anyways, Phil, you start. Let's go through your schedule, what we were going to chat about. But thanks, Josh, for being here.
Mm-hmm. Yeah, so let's get into it. So yeah, the theme of the day is AI and this idea that we sort of have this barbell theory playing out, where you have these huge companies that are incredible technology companies like Google and Meta and Tesla and Amazon and Apple, and then you have these small companies that also are supercharged by AI. So AI can benefit both the very large and the very small. And so Josh, we were talking about Josh at Uber and Josh at AIC and Covester, but his startup now, his endeavor now, is this company called Wave. He's doing it all himself. This is so freaking cool. Why don't you just tell us, Josh, what you're doing, a little bit about the company? I have a few questions for you.
Sure. So the quick and dirty is I had a bunch of these roles at startups and kind of always admired engineers as the people who were actually building the thing that I was operating or selling, and dealing with engineers. And I got pretty, like, I was adjacent to it for so long that I kind of got the sense that I could maybe do it too. And ChatGPT came out 2 years ago last November. And right when it did, I just left my last operating role, and I was like, this is the moment. Like, I now have someone I can ask any question to about anything, no matter how stupid. And it happens to be very good at like engineering work. So I was already sort of 60% of the way there, and it got me the rest. And so I built a few different things. And one of them, they always say we can always use more note-taking apps, right? That's the expression. We can always do more note-taking apps. It's something like that. And so I made a few different things. And one of them was this note-taking app that is basically, it's incredibly simple. It records audio, transcribes the audio, summarizes that. And so the typical use case is recording a meeting that's actually like happening in real life. My father, though, was sick at the time. He's okay now. He's a former doctor, but he'd go to these meetings with doctors and come back and not really be able to deliver a coherent take on what they said. It was complicated stuff. My mom was there too. They're not dumb people, but it's just hard. And I said, hey, here's like a toy. I made this just for fun. Try using it at your next, thing. And the result was amazing. I mean, it was like an aha moment. Like, okay, this is a thing. I was noticing AI apps were very web browser based, very opinionated. People were building for themselves rather than for actual users. There's almost nothing in the App Store. And so I made this, I put it out. It was live probably by the end of 2023. And I've done basically all the engineering, front end, back end. I have a design firm that does like the thing that you're looking at here. They put together, and I implemented it. And I've like hired 0 people, which is the way I want to do it right now. Because managing people, which I've done, I hired about 100 people at Uber, and at one time had like 70 of them on, there with me. That becomes your full-time job, like manage. I mean, it is literally dealing with them, becoming their therapist, helping through issues. How do I get growth in my career? How do I solve this problem? I have a problem with this person, whatever. So I really wanted to take a turn of just me and the users. So I have a boss. It's the people who download and buy this. And the support interactions. So there's support in app, and it's all me. I chat with them, and I haven't made that AI yet. I do that because it's been incredibly useful to like talk to every person who has a problem. And I have hired finally an engineer whose code is not live yet. So far I can honestly say everything out there was done by me. That's going to start to change, but there won't be any full-time employees, and it'll still sort of be me in a small room, which has worked out super well for me so far.
Michael.
No, this is terrific story, Josh. I just wanted to pull out one of the broad points. Sam Altman at OpenAI has consistently said over the last year that AI is going to basically lead to a world of many businesses that will be 1, 2, 3 people and worth billions of dollars. And it's amazing to see the initiative that you took to make this happen, especially as a non-engineer. Can I ask you 2 questions? Number one, what was a little bit specifics of how you, as a non-engineer, put this together through all the AI services? Just a little bit more on the tech stack. Number 2, the biggest criticism people have around AI businesses right now on the consumer side in the 6 box of applications is that everything is a wrapper around GPT and so on. And that I think is a positive rather than negative. And you, I think, are a case in point, but I'd love to hear more.
Yeah, I mean, so I'll do the second one first. Everything is a wrapper. I mean, everything is a wrapper around something. And so it's true. It is the very basic version. And now I'll sort of loop back to the first thing. My first thing was like ChatGPT. I'd like to have an app that does the following. It records audio. It takes the audio, it transcribes it through this API endpoint. You send all the audio there, you'll receive text back. Then take that text and send it over to this place and get back summary and show it in the app. And it returned that to me. I took that, I put it into the thing, and it totally worked. Took that out into the world. I tried it, and then it didn't work. It did the first time or the second time, then it didn't work. It's like, why? Well, because I turned the app off. I slid over to a different app. It broke the connection, and it didn't work. And so I sort of intuited the use of a server. Like, oh, well, you'll upload the file, and then all the good stuff will happen on the server, and it'll do its thing, and then it'll return. And so if the user closes the app instead of staring at it, it'll still work. And that was the first step of kind of, how do you do this for real? What I found is it's not learning how to code, it's learning how to implement. It's learning how to use the different services. How does this work? What is this? What is a serverless? What is a server? What's the purpose of that? And so I really took it. I'd been kind of like near it forever, but never really got to sort of do it. And so it was like just grinding until like all the answers are there. All the answers were there on Google. Now they're just in an interface that kind of summarizes them and delivers them fast. And so it was sort of like every little thing, like, how do I do this? And, I knew a little JavaScript just from being around. So React Native, which is a JavaScript-based language that deploys to both Android and iOS, felt like the right thing. It's like, okay, when I background the app, the audio stops recording. That's no good. How do I fix that? And I spent like a few weeks trying to fix that. And there's a way. And, there's a whole ton of open source stuff out there. React Native is open source. Expo, all these great things. There's a lot of people out there working in these sort of tools. And so there's a lot of help to be found is what I found. And it's been basically just iterative, finding the problem, dog fooding it, talking to people. I do, like I said earlier, I do all the support. I have not the easiest thing in the world that I could outsource. I refuse to, because my user base tends to be a little bit older. They tend to maybe not be tech savvy. They're not on Twitter. They're not listening to this. They're just people and I get a lot of complaints that way, but I also get a lot of positive feedback. And while I didn't make the models, I didn't create OpenAI or any of this stuff, there was a similar like, holy fucking shit moment with a lot of these users that reminded me of Uber, frankly. Like, you know what I mean? And in that case, we actually did like make the thing. But for these folks, they were not aware, because this is kind of a new thing, that your computer can record audio and then summarize the text. Like, that's the killer app of AI right now. It's text understanding. It takes a bunch of text, makes it a little less text.
Yeah.
Like, so that's crazy.
So the thing for me with AI, guys, is it's not about me. Like, Uber blew my mind because I used to go to San Francisco a lot, so I was early there, Josh, and I was part of that whole early investing crew and Angel List, and seeing all this like crazy vals. And then Web 1 didn't do much. It was all Web 2 for me. This Web 3, not so much interesting to me, but fun, degenerate economy. AI hasn't been about me. It's been about people around me, right? Like, so drag me back to Stocktwits, because there's so much more we can do with less people, right? And it's so much more about our creativity on top of the platform, right? And, you know, listen, why I told the story about my son has these moments where I just feel bad because Google kind of made him as a non-learner, as a kid who struggles learning in a traditional way, right? Just as smart as any other kid, but the school system does not work. Google was great, but it was not a good hack for his brain because it didn't analyze the text. It didn't make him read. It just gave him links that he wouldn't read. It gave him dumb. It just made him a little bit dumber, right? And less curious, because you had to truly click around and lead. And I think what you're saying, this text-based layer where Max can type a question and get the answer pretty much, could be wrong, could be right, but mostly right.
Yeah, mostly right.
Mostly right. For a kid who's never going to click, mostly right's better than not being curious. And that is the aha moment that I continue to have. For me, not so much, because I'm a creator and I don't like AI and I don't need to touch it. I prefer my team to hand me 95% finished work, and I'll finish the last 3 to 5%. Don't hand me 80% work, because then we're starting from scratch. So as a leader, I want my team to get it to me. Now, if my team uses AI, great, get it to me faster. Yeah. I can proofread it. So I think that's still the aha moment for AI. Obviously, it's just the beginning, as Michael has been harping on. So congrats to you. I mean, the key thing is, I think, Phil, is there's two choices. You can go raise a lot of money in AI, or you can do what Josh did. And I think he'd been around the hoop enough and seen every type of cap raise and been a VC for a minute. And so good on you. And you obviously had the family moment with healthcare, so that changed things too. So
that's it. Go ahead.
No,
Josh.
I'm sorry. Go ahead, Phil. I was just going to say, I mean, raising money definitely was I was lucky that I was able to do this for like a year and a half before I made the first dollar. Now it makes money and it's great, but I was lucky that I was able to sustain myself for that year or so. But I feel like raising money would make the success bar so much higher. And I wasn't really interested in that. I mean, if anything, I relate myself to, like, I run a store. I'm a shop. I run a store in the digital world, and my wholesaler is OpenAI. I buy the model from them in bulk, and I sell it to people on a retail basis a little bit at a time, and I make a profit on that. Like, that's not a new idea. It's new in what I'm doing, but buying something in bulk and selling it essentially is not a new idea. And that's kind of what I do. And I don't need to raise a bunch of money and shoot for being $1 billion valuation, because that's actually, that involves a whole bunch of things that are unpleasant for me. And I don't want to do that.
Which brings me to the theme, Phil, and try and tie this all together. We live in a world, we used to say too big to fail. I think when the banks failed in 08, it was like this thing, the banks are too big to fail because, you owe a bank $1 million and it's a lot different than owing them $1 trillion, okay? But really what's happened is we truly now have companies that are too big to fail. There's 9 of them, the Nifty Nine, the Fangs, whatever you want to call them, Batman. And this leads us into the chart of the week, the most interesting chart of the week, which is not Fartcoin this week, although Fartcoin continues to trade crazily above $1 billion or so. Is I saw this on Gurley and Gerstner's podcast, which are great podcasts, right? Like, they truly are geeks for geeks' sakes. and asset managers, Gerstner. So it's not as sexy a chart as Farcoin, but to me, it's the most important chart, most interesting chart in the world. And why is it? Because the Nifty Nine, the FANGs, are spending all, other than, I guess, Google. Okay, so that's interesting. Are spending 60 to 160% of their free freaking cash flow investing it. Okay, and I just don't think people understood. There's a million ways to read this chart. Michael, you give us your read. We all will read it differently, but it's hard to see. This is the most bullish thing that I can see, and it's also scary, bearish in many ways. Depends how you read it. So go ahead, Michael.
Big debate on Wall Street in terms of the scary part, right? We're talking about these companies going from investing $20-30 billion collectively to now $20-30 billion per company and more going into next year and beyond. The only company, if you notice, of the five on this chart, Apple is the one that has the declining chart because Apple is really tending to its core 2+ billion users of phones and PC and Macs and so on. But the others are, as you said, they're collectively going to invest probably north of 200 billion this year. Microsoft is at the top of that at 80 billion. You mentioned Google is not on, spending as aggressively, but Google also, everyone here is 20, 30 billion plus. Big debate on Wall Street, when will we get this money back? And I've written a bunch of posts on this. The returns on these investments typically are 2 or 3 years, 4 years later. In this case, I think we're going to see it a little bit faster than investors think. And part of it is the early part of our discussion, things like what Josh is doing. What Josh's app, for instance, is doing is basically if he grows his users from tens of thousands to hundreds and millions, let's say, every time they're using his Wave app to do all of the note-taking and recording and transcript thing, it's using the compute that these companies are building like crazy. It's inference. It's these buzzwords. And then we'll be creating synthetic data out of the data that Josh's company is transcribing, and it will his next iteration might be, I'm using Josh your example because you're here, the next version of your product could be all my data converted in not just into transcripts, but converted into learning about what I do in terms of the next questions I want to ask about my own work and life, and that is going to use more compute. So that's point number one I want to make on this. Number two, all of these companies have a tailwind with the upcoming political change in Washington in a week, with Trump taking office and Congress changing, because we're going into the world of what I called real tech politic. All of these companies are using their relationships with Washington and Trump aggressively to make sure that their investments for data centers and so on are able to scale across the world, because they're framing it against China and so on. So this is a political element of this technology wave that is very unusual relative to previous technology waves. And so the combination of hundreds of billions with politics is a very potent force going into the first quarter of this year. And it's a trend that continues, obviously, for the next 2 or 3 years. I just wanted to highlight that it's very different. It's a big force on the way we invest in these things.
Phil?
Yeah, so we're going to come back to this idea of everybody benefiting from what's happening in technology right now. That this AI wave, pun intended, is gargantuan and amazing. If you are one of these tech giants, and then you have the political tailwind as well, they're all contributing to the inauguration. They know what they're doing. It's a play. You can't blame them. And at the other end, what Josh is doing, if you're out there, by the way, just a quick point, and then we're going to move on. We're going to talk about TikTok. Just a quick point. If you're out there and you are a lone wolf and you're using chat GBT or Gemini or whatever, and you're learning all kinds of things and you're able to build without knowing how to code, or you know how to code and you're building things and augmenting your own skills with the skills of an agent. There's a lot of negativity out there. And I just want to just really say this really quickly, and we're going to move on to TikTok. There's a ton of negativity out there. There's a ton of people saying, oh, everything's terrible. Politics is terrible. Everybody's ill, blah, 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 whatever. Just ignore all of those negative people, because this is the greatest time to invest, and it's the greatest time to build. If you're small, if you're large, if you have a lot of money, if you don't have a lot of money, if you're just scraping by, if you're doing something on the weekend, you have a job, a 9 to 5, but you're building something on the weekend, this is the greatest time ever. So just ignore all that negativity. It's all bullshit. It's all noise. Okay, let's talk about TikTok.
Hang on, Phil. Did we get Max? Did we get a good take for the most interesting chart in the world from me, or are we good? He may not be listening. Okay, keep rolling. Okay, keep going, Phil.
Okay, so let's just talk about TikTok. Right now, there's Michael, why don't you just take the lead here? Just tell us what's going on, what the implications are, and who's gonna, who's involved.
It's a key topic, and it's not just about TikTok. TikTok just happens to be the focus, and I've done my 2 or 3 posts are about this: the politics, the real politics around TikTok, the real politics around the Mag 7s, and so on. But the core issue around TikTok is obviously January 19 is the legislative deadline when TikTok was legislated to either spin off U.S. TikTok, which is about 200 million users, to investors in the U.S., spin it out of its parent company, ByteDance, which is one of the biggest success stories in China. And the government of China owns control of ByteDance through what's called a golden share. And it was rumored last night that they're getting involved potentially to cut a deal with Trump and Elon, et cetera. Who knows if it's true or not, to potentially have Elon take a piece of U.S. TikTok with other investors. A number of billionaire investors in ByteDance who are Trump supporters are involved as well. And Trump changed dramatically his view on the TikTok ban. He actually ironically initiated some of the stuff when he was president the first time around. Now he's a supporter of TikTok not being banned, and he actually filed an appeal to the Supreme Court as it's deliberating. So there's a bunch of legal things short term that are going to happen in the next 3 or 4 days. The Supreme Court will say, hey, the ban is effective, not effective, et cetera. Those are tactical things. There is a move in Congress to rechange the legislation to add another 270 days to the thing, so it'll give Trump an opportunity to cut some sort of a deal. And so that's going on at the micro level for TikTok. The broader impact of TikTok is that this was, in my mind, the most successful AI-driven application for consumers that we've seen in the last 5 or 10 years. Why? 20 years we've had Facebook with the Facebook app, with Instagram, with WhatsApp. All of the social media that we know, what Howard, you talk about Web 2.0, has been based on the social graph. All the people you and I know and interacting. TikTok basically, with ByteDance in the back with their technology, fundamentally changed it. They use machine learning and emerging AI technologies to create what's called the For You page. It's 100% algorithmically driven. You don't have to do anything. It just figures out what you like from the things you look at and so on. That was brilliant. Everyone copied it in the US. YouTube has something called YouTube Shorts, which has hundreds of millions of users. Facebook, Meta, Zuckerberg was laser focused. He's got he's literally minting revenue of over $10 billion a year from his TikTok app, app called Reels, which is about the same revenue last year as TikTok itself. So just to give you a sense. So if TikTok gets banned, it's actually a positive for short term for the U.S. companies like YouTube, Google, and Meta. But the broader issue is that AI is being fundamentally used to leverage our data to figure out what we want, and that is and TikTok was one of the best examples of that. The political and geopolitical and security issues aside, The other aspect of this battle that's going on is that a majority of the US and worldwide 2 billion plus users of TikTok love the app. The businesses the creators love making money off it. So this thing has a lot of mainstream support, and that's one of the reasons why Trump changed his view. He actually found it very helpful in the election, in the campaign, where a lot of his support leveraged TikTok. And so for all of these reasons, this is a political tussle. I expect TikTok will not get banned. There'll be all these political moves and economic moves, etc. But it's a very important thing to kind of watch and track for the whole industry over at least for the next couple of months, but through this whole year.
Yeah, the TikTok thing goes to too big to fail. Two things can be true, Phil: too big to fail and too small to fail at the same time. The money middle is just money to be made in the middle, but there's no joy. Right, you've got to be playing, and you got to be trying to get into the planetary Nifty Nine world, or you got to stay where Josh is. That's where I feel you need to be. Under 100 people, crushing it, ego put aside, living under the umbrella of these, Godzilla fighting, King Kong. Like, they're not going to notice you, a T-Rex fighting King Kong fighting. They're just not going to know fighting Godzilla. They're not going to notice you. The most obvious thing that I've been writing about for a week is that this is coming to Andreessen and Musk. Musk played everybody. Went to Joe Rogan early. Now Zuckerberg's kowtowing to Joe Rogan. Right? It's like everybody goes. He's the new pope. You got to go on. You got to go on Joe Rogan. Say ivermectin cured this. You got to go in, and Mark Zuckerberg got a perm. He got himself all dolled up with the gold chain. He has a new hair dryer, and so you get to go talk and grunt on Joe Rogan is like a cleansing. It's the new juice cleansing, right? So it's all a fucking charade. These people are the new preachers. You got to live with them. These are our overlords. You can't fight them, right? These guys make Goldman Sachs look like kitty cats. Right. But, we hated having Goldman Sachs in the White House. And like I said, now we have Silicon Valley in the White House. And those tentacles, they're not
That's a great line.
The unicorn squid is a lot more, I wouldn't say dangerous or interesting or the wildest story, the weirdest thing is the true story, as they say. And this is the weirdest story to happen to the White House. Because what did they call it? The vampire squid is nothing compared to the unicorn squid. That is my take on this.
The Goldman octopus is now cute and cuddly.
Yeah, it's like, ooh, I hope Goldman does well. Like, I kind of like, I'm long Goldman. I'm like, ooh, they're the underdog, right? Like, Robin Hood's trading almost, at $40 billion. Like, you're kind of rooting for Goldman. We need Goldman because, without Goldman, we're going to be stuck with meme coins for the rest of our life. If Goldman can't take companies public and convince companies that that they should pay a 10% pillaging tax to get them public, we're going to be left with Fart Coin and Butthole Coin and Josh Coin and Perlman Coin. So this is one of the most epic. You have to read the markets here. And then, Phil, if we could pull up this chart about venture capitalists now playing this game, and this is where Josh was very smart to get out of the venture capital game. The venture capital game is over. Now you can play it as I do. You can be one on TV. One more chart
Not
over.
Not that one.
Yeah, well, one more. Keep going.
Down there.
Number 6, yeah.
So this is an older chart, pitch book, right? This has now become the Nifty Nine, right? The Nifty Nine in BC are Andreessen, General Catalyst. Be careful who you take your money from. They're no different than Goldman Sachs. Thrive Capital. I don't know who Flagship Pioneering is. TCV, I know them. Arch Venture. So Tiger Global, Kleiner, IVP. Okay? You want to play ball and don't have these guys on your cap table, you're not going to enter the universe of the Nifty Nine ever, ever, ever. Okay? That's just the new game. They have the money. And if you're serious about being a big company, you have to go where the money is. Okay? Which makes too small to fail, and chasing companies like Josh and finding more Joshes more important than ever, right? Which is what we do at Social Leverage, right? You have to change the game, and the game has been completely changed. Goldman Sachs is not the gatekeeper. The White House isn't even the gatekeeper. Silicon Valley's the gatekeeper. And while I was like making fun of them going to Dubai and taking money directly out of the ground and putting it into taking the 2% to launder it through venture capital, it's all funny, but it's true. And now the game has been played, and you wake up today, Michael, and you see that private equity looks the same as venture capital, that looks the same as the Nifty Nine. That's the world we live in.
This is a great chart, great point. I'd like to add one couple more points. Number one, you mentioned private equity. We will have a chart in a later show where we'll have a similar chart on the private equity side. Those two, private equity and venture, are blending in the world of tech. Why? Because the Nifty, the 5 that you had on the most important chart of the week, those companies, for the first time, are now infrastructure companies. The $200 billion they're spending is on assets in the dirt. And that's why we need hundreds of billions, and they're coming from Blackstone, BlackRock. These are companies that run trillions of dollars, not tens of billions. And you mentioned Dubai, Middle East has 700 to a billion to $1 trillion they want to invest in US tech. So those are the new sources as well for capital. And then the last thing, since we talked about Goldman Sachs, I'll bring them in and tie in with the bow. Goldman just this week reported that they've reorganized their top leadership to take their private asset business, which is a fancy word for non-public stocks, and they've created a behemoth, which to basically draw money from their wealth management business, which manages indirectly and directly over $1 trillion of assets with the richest groups and family groups in the world and the biggest institutions in the world. They are going to make it easier for companies, whether they're small like Josh or super large like an aspiring Uber, to be able to not just wait for IPOs in the public market, but to raise tons of money both through equity and debt against both the venture industry who will fund this and the billions and trillions coming from the private equity and the sovereign wealth funds and family office groups around the world. There are almost 3,000 billionaires in the world, and they all have family offices. That is all getting harnessed into all of this as well. So I just wanted to highlight the bigger picture.
Yeah, family office is a good trend. Like that's our fintech and wealth tech. That's where we're focused. Like everybody's a family office. Josh, I mean, when you look at these, how does it make you think about your business in the future?
Well, I mean, the firms at the top of that list. So because of the Uber bit, and probably only because of that, I got VC inbound from the big guys for Wave. And I think if assets under management are 7 billion, writing me a check for 5 or 10 million, I'm never going to matter to you. And so we're just playing different games. So I don't want to get into business with someone who's playing a different game than me, because then that's going to be problematic. So I just,
careful what you wish for in a world of wash of capital, and we're also scarce. So we're also in a world of wash of capital, if you look at those charts, and a world of scarce capital where rates are 7.5%. So this is really a very, one of the trickiest markets I've ever seen from both the trading, investing, even though people are saying they're doing great. Fine. If you're in the indexes, you're doing great. But if you're not doing the indexing, this is a very tricky game because we're a wash in capital and very scarce in capital at the exact same time, much like, go ahead, Mike.
And just a key point, Howard, you made and Josh is making about getting 5 or 10 million even from the big VCs, you got to matter to them. Brad Gershner, who you talked about, had a great podcast with Bill Gurley a couple of pods ago, where he talked about that, you want to kind of focus on the VCs that are $1 billion, $2 billion, $3 billion in assets, less the 10, 20, because you want to matter as a founder. You want to matter to them, because the bigger the VC that are in the 5s and 10s, they're increasingly running their businesses for the management fees. Whereas the smaller VCs are really doing it the way VCs have always done it, which is work for the founders. That, if we give you 5 or 10 million, we're going to be working with you to help you. And that is Brad Gershner's point that he makes with his fund, which is both public and private with Altimeter, his approach versus, let's say, the Andreessens and the TCVs, who are literally merging big sets of funds and running it for management capital. You'll also likely see a trend in this year or next with some of these companies, just like the PE companies went public, some of the VC companies will go public as well.
Yes.
So
Big
to raise
mistake,
more money.
but they can't help themselves. They will.
Yeah.
Totally a great point. Think it's going to happen. It'll be a disaster. But God bless them. I think Andreessen just has run the table beautifully. From they take huge risks. They're not shy. You can't shame them. I mean, if you want to be in this business, you have no shame. You have to fight all day, and you got to give them credit. Like, they don't give a shit.
And two of their senior partners, at least two of their senior partners, along with a whole bunch of others, are literally going to be sitting in the White House or in DC with official jobs around the new administration. So the idea is that they're going to be all focused on synergies together. Yeah. That's the fun word.
Honestly, it's like we have the most interesting chart in the world, Phil. This is the most interesting. Obviously, everybody says this is the most interesting time to be alive, because there's just so hard to be happy, so easy to be happy, so hard to raise money, so easy to raise money, so hard to fucking start a company, so easy to start a company. You've got it.
So hard to invest, so easy to invest.
Yeah.
The best
it's
of
never
times,
been easier to invest.
Bring out Dickens.
So I just want to end the program with.
Hang on, if we're talking Dickens, you know what I do when I pull
easy
up
to
my
take
Dickens?
the creatine.
When I pull up
hard
my Dickens,
to get strong.
Nothing like a dip in the creatine.
So I just want to end the program. Josh, by the way, thank you so much for being here. This was great, and your example is perfect. And Wave is the app. You don't even notice. You don't have to mess with the AI layer. You just go use it like you would any other app. So this idea that AI is now moving into the background, just like when you pick up an iPhone, you don't have to worry about what chip is in there. You just use it and it's intuitive. That's where we're heading. And that's one thing that I just love about what you're doing, and the fact that you're just building it, even though you're not an engineer. I just want to say one thing, though. The name of this program is Trends with Friends. And it's so easy to get caught up in the politics of this. And there's people out there who are going to be super partisan on one side or the other. They're going to be super pro everything that's coming out of the White House, or they're going to be railing against it every step of the way and hate scrolling or doom scrolling on social media, looking for all the bad. None of that matters. There's no emotion and there's no partisanship in this whole endeavor, whether you are an investor or whether you are a builder. This is an incredible wave that we are seeing with artificial intelligence and with the what Michael calls the realpolitik of AI. And the key for you as an investor to find the trend is to get on board, is to find what things are growing like crazy. We had this capital expenditure charts that we gave you all the materials today. You see the largest, greatest companies in the world that figured out how to be flexible. Back in the day, Exxon was like this huge tanker. It could only turn this quickly. Today, Amazon is this gargantuan company. It could build something just like that while you're not even looking. And so your challenge is to just find the trend, jump on board, don't pay any attention to the morality or hey, listen, if you don't want to be a trend investor, don't be. And you could be concerned about the morality and the ethics of everything. But if you're not, and you just want to invest and find the trends, this is an incredibly powerful trend. Howie.
Just a couple other things here on this topic, because we didn't mention money. So AI, you said, what was the second thing you mentioned? AI,
politics.
Politics. The third thing that's solving this abundance problem is harder to raise capital and easier to raise capital, and it ties into like never been a better time to be a marketer. Which one more question for Josh is like, if you were going to make a hire, where would it be? But hang on, is money, right? The SEC is out there. We're funding the SEC. The fintech, as a fintech investor, yes. I mean, pay to play has always been the thing. When we put money in Robinhood, the reason there was no innovation in fintech is because you had to deal with the government, right? And VCs hate dealing with the government. Josh knows this with Uber, right? They didn't ask for permission. They just went and did it. You cannot do that in American fintech. Now you can, right? Like, so in a world of money, which doesn't interest the four of us so much because it's, like you said, it's kind of boring, just printing money and making up money and distributing money. But in a world of new money, right, and in a world where fintech has been funding the SEC, Robinhood just paid $45 million yesterday for who knows what. The headline says the SEC wins, but we all know what happens. This is a pay-to-play game, and the reason $45 million to Robinhood, let's face it, as a public company now worth $40 billion, the stock's up on this news, right? Because everybody knows the fucking score. This is just a shakedown. Whatever Robinhood did right or wrong, these made-up numbers in fintech and fines by the SEC is just a tax that the banks and the fintechs are still playing from 2008, and it's not going to stop. And tech got so big that you can't even fucking tax them. And so the other thing is, look for Snapchat to get bought. Once this deal goes down, look for Snapchat to get bought. He's got no way out, Evan. It's fun to be his own king, but the shareholder, that stock will keep going down. Once TikTok gets sold, Snapchat is a goner if the way I see it, because the FTC is going to say, just sell. Like in the old FTC would say you're not allowed to be bought by Facebook. In a world where TikTok gets bought by Elon and Trump and whatever, Snap is a fucking, now $20 billion. I don't know what the premium can be because I don't know how it's worth $20 billion, but that's gone. Evan, you had your chance to be a public company. You're gone. So there is a lot of cleanup that's going to happen as the upside of these companies are doing nothing for shareholders for years and years and years. And this is why kids have moved on to meme coin. Like, even though they love Snapchat, the business isn't run well enough. So you might as well own a non-fundamental thing like tokens. So it's really, we have to say that AI, politics, and money are just creating so much change right now. It's just fascinating. So, those are the trends that we want to talk about with friends. And as much as I hate politics, luckily Silicon Valley makes it a little more fun to talk about politics because they seem a little more human than bankers, even though they're flawed. Bankers just had yes, the overlords have self-interest in mind, but tech is actually creating shit. Like as Josh talks about with visual, his Tesla versus Waymo, we're moving things forward versus just financing things. And so this is like a really more interesting era for people that really want to kind of do shit. Go ahead, Phil.
Josh, last word.
Last word, Josh.
Oh, this has been really fun. You asked what I would hire for if I could hire for anything. It's never been a better time to be a marketer, and I could really use one a little bit because I was one kind of back in the day, and I really quite enjoy the engineering and technical side of things. And we've had some good luck on Facebook ads, but I could use someone a little more clever.
It's the most important job in the world. Go ahead, Mike.
As a guy who loves note-taking apps forever and what you're doing, I love it. I'm a big user of transcription products, and yours is great. What's the next big feature if you wanted to scale it to the next level? What's the next thing you would like to add?
So it originally started as just like in-person audio, but I have a feedback request form, and the users upvoted things like Zoom meetings, which is sort of obvious, but now we support that. You can also make phone calls in the app, so you can literally like dial out. It calls as you and records it. I think the next thing that I'm working on now, there is now a chat with an individual session. So at the end of a recording, you record for an hour. It gives you a summary and also a dozen suggestions of like chats, like what were some of the things that Howard said during the call, and you tap that and it feeds that out. Each chat only knows the information about one meeting, but what's coming next is a chat that knows the information about every meeting you've ever had. And so it's like, awesome. I met with Howard all these different times. Can you compare how his opinions have shifted over the year? And it does like a search for all the Howard quotes. And so to be a little sticky, because right now retention is fine, but it could always be better. And so that's what I'm working on currently.
So think about what Josh said. Sorry to get the last word here, and Phil, you can have the last word. But we went from a banking phase, a leverage for financial leverage phase, to a tech leverage phase, and now we go to a marketing leverage phase, right? Like where the smart people that can build lean businesses, no one wanted to hire a marketing person because everybody thought they could code their way out of growth for the last 15 years. In a world of scarce capital for small companies, in a world where small, and it's tough for small companies because a marketing hire is very esoteric, but Josh is dead right. His next great hire will be a killer, and it may be a kid out of school. It may be a senior person who's 60 who got put out to pasture and now wants to come back to work. They're going to have jujitsu. They're going to have personal skills. They're going to be able to use social media, not just social media to go wide, but social media that actually has influence and engagement. And so it's a greatest time to be a jujitsu marketer. And for young people out there, learn how to network with intent in this era. You can't just say I have 100,000 followers. You got to say, can I make people move? And so if you're young and thinking about college and thinking about what you're going to do with your life, invest in marketing. All right, Phil,
Right on.
I'm tired.
Yeah, so we're just going to continue with last words for the next 167 hours until next week's program starts, and then we'll do it all over again.
All right.
Adios, guys.
Great to see everybody.
Thanks, guys. Much appreciated.
See you.